I started recording. Can somebody just confirm you guys can see my screen trading view right now, right?
Yes.
Super duper. Excellent. Okay, so the session is being recorded. We're going to go over 3 things specifically in this session. Number 1, we're going to be going over some information regarding the day trading strategy, just so we can explain it to people a little bit better and people can understand it. So that's the first thing we're going to do. The second thing is I'm going to go over a very specific process. It's something that I went over in decent detail in the starter course that you guys have on the website. And then finally, I'd like to go over combating over trading. I've prepared a small PowerPoint for this, and in that section, we're gonna talk a little bit about this and I'll tell you why we're gonna go over this. We're gonna be going over combating over trading for the reason of the day trading strategy can give a lot of signals. The point here is I want to teach you guys on which signals you should be trading. So what I want to do is kind of prepare you guys for a mental approach, mentally prepare you so you know which assets to execute and so forth and so forth and so forth. So let's start with this 5-minute view of Ethereum. We know that the markets have dropped a lot, but they are recovering slowly. I mean, this drop doesn't mean anything because I'll go over basic price action with you guys right now. So this is Ethereum. Let's go on the 5-minute. The main thing that I want everyone to remember is that price action dictates market momentum. Yes, as an overall, we do have a lower high, but when we start taking into account higher time frames, we start understanding a little bit more of where this market could be going. So I've released information about this already. There is one signal that could indicate that there could be a bear market, which is this lower high. But as an overall, we're actually holding a structure of the previous market, of the previous lows. So the previous lows are clearly holding with a massive rejection. So if we come down to the 5-minute, and this is something I explained already, I just want to teach you guys very quickly how to find very important rejection areas. I've told you this before, but this is still a vital component of day trading. Just a small bonus. So the market's coming down, right? The market's making an aggressive move towards the downside. This is the first actual support. The first place where some support started initiating was in this area. So this is the overall resistance, right? We have this spike here, and then we have a potential rejection area here. So we have strong momentum, some buying took place, more selling took place here. These are important levels in the recent past. Now, where we actually stopped is here, telling us this is a major support, and here was another key level. Okay, and that key level held pretty nicely. Now you guys seen that on the tick charts that I've shared in the morning. We see that level also held more or less in this area again. We are rejecting the previous area, but we're still holding what? We're still holding the structure of the market, the short-term market. So these are all selling opportunities, buying opportunities, blah, blah, blah. Let's go over the strategy quickly. We'll go over the 5-minute chart. For those of you that watched the starter course, you'll understand more or less how these indicators work. MACD is used for momentum. Volume helps you to find specific pairs and understand if there is activity in a market. The rest, crossovers, blah, blah, blah. You already know how these work. So we have a decent move towards the downside. The criteria is very simple. Now I've added a VWAP into here. This is our custom VWAP. The white dotted line helps quite a bit actually with exits and entries as well. So it's just another confirmation to help you get into a market quicker and with more confidence. So over here, clearly, again, what we want to use, by the way, from the technical standpoint is technical analysis. So let's try and focus on the technicals on this aspect here. Trend lines work nice. They always do, especially on tick charts. We're not on tick charts now. We're on the 5-minute. We know that the market is facing a little bit of a support towards this angle here. So support, support, support. We have potential higher momentum in the market here, but I want to bring your attention to this area of the market here. What is happening with actual momentum with the MACD? The MACD is actually trading lower, right? So we're starting to see a bearish cross. We already have one up here. The ATR is suggesting that bearish momentum is in the market. And then you want to use a bit of a hybrid system. You want to increase the confirmations, you know. Here, we're holding 54. Momentum is down. We got a crossover. We're valid. The ATR is above. VWAP is above. bearish crossover. Well, we actually came back to the VWAP in this area, and then the market shoots down. Regarding take profits, there is a lot of different ways, but using the VWAP, you can also understand that there is support in a specific market, like here. These are the average prices of this market. Here, here, here. And you can see price action hitting that area decently. Okay, so we broke out of a previous level where you can see the ATR holding a couple of times, and then that level broke. And then what's happening over here? Let's zoom in. You can clearly see price action shooting down, retesting that area again. We're building an accumulation over here, right? A little bearish flag. The market shoots back down to the previous area, starts heading towards the upside, builds a potential bullish accumulation right there. We are bullish. The only thing that the ATR is not bullish, but we have one tick here. We got a bullish crossover all the way back here, and we got the VWAP above price. Now, that doesn't mean that the market's going to shoot up. I want to start training you a little bit more when you're day trading to understand that you don't need to ride the market to the moon or to hell or to heaven or to wherever else. Where you need to ride the market is to until an area where you believe that the market could drop. The ATR will help you with this a lot of times, like here. The ATR on the recent momentum told us that this could be the average price currently. And that's exactly what happened. Price action came to this area, resistance, tried to break above, next candle brought us back in. Then we started seeing bearish confirmations. What are the bearish confirmations? We got this thing below. We got a bearish cross starting over here. The ATR moved above. We're below the VWAP. One of the main reasons I want to talk about combating over trading is because I don't want to see people executing every single signal that you get, because that's just not, it's going to work, but it's not a professional and structured way of trading. You want to be executing positions based on the confirmations you have. A very good way to do that is, I'm going to pull up this now. A very good way to do that is to use multiple time frame analysis. So you can actually add your 1 hour chart into this too. The 1 hour chart does help with momentum as well, and seeing a little bit of a bigger picture of the market. It really does help. And then you can execute on the 200 and have the 5 minute in there as just another confirmation for entries. So I'm using free charts, free processes to execute positions. And depending on what we're seeing on the 1 hour chart, also highly depends on how far we're going to go. In rare cases, do you see the market do this, and do that? Okay, there has to be more reasons for this. Why did crypto crash? I'm asking a question, but I really don't want an answer because we don't have too much time, and I still, I do want to spend some time with my family too. So, why did crypto crash? We don't have any massive verified reasons of this being a massive bear trend. Yes, the market crashed yesterday big time, but that could be as well as a side effect of everything that happened throughout the week. Keeping in mind that we had a hectic week and a lot of different reasons. Now, we also know that crypto, just like everything else, tumbles with COVID. Now, I know that you guys already probably saw that I am posting in the fundamentals section here some information. You can see that CDC here said that Omicron cases have been discovered in at least 15 states. How this virus is going to impact the market, we know that it should be bearish, but we also need to think in probabilities and understand basics about viruses. I did research them a little bit. They do become weaker, and logically they become weaker. Even if you go back to the Black Death that killed hundreds of millions of people, also became weaker with time. One of the biggest cures, by the way, was sunshine. Fun fact about that one. Yeah, so the probability of this market going up is very valid, and I would like to bring up trading view and just go, that's not it, this one. And I just want to go over, for example, US 30 right now with you guys. So let's go to currency.com and let's bring up a bigger chart frame for us to understand something. If you guys focus on technical analysis, you would have understood that this is a complete bullish move. Even though COVID brought it all the way down, it did make a structure higher low, because this is the low of the market, this is the high of the market, this is pretty much a higher low. Even though it killed off these ones here, the end point, if we look at the last two plays of the market, it came from here, it went up here, it formed a higher low, and it moved up. Technically, based on the weekly, if we check the weekly, we are still very bullish. These are all normal corrections that happen in every bull market. We have a correction here, we have a correction here, and this could be a correction. Using a basic trend line, we understand that this area is, a decent area of support. And look at this, price action hit this area here, hit that area there, hit that area there. So it could continue up, but what could happen here is, of course, lower high or higher high. We don't know. We are not in the predicting business. We are in the business of executing positions and making money. So I think the system is clear to you guys in a sense that you understand that how you should be executing positions. I have found through all my testing and reviews that having the 200 tick as your execution chart works beautifully. You can go to the 150 as well, but then you really need to watch out what's happening with the ATR, because the ATR will be shifting and becoming more spiky the lower you go. Of course, you're going to be able to grab decent moves as well, like this one. And that's one of the reasons I added the VWAP into this here. Now, using the 5-minute chart, that helps me a lot. So let's go over the 5-minute here together. So the 200 and the 5-minute are two very different charts. Okay, even the 1-minute can't compare to the 500. What we see here, this, and this swing down, that's only this move here. This, and this. That's all we're seeing right now. Correct? That's all. So we can see that momentum here is dying out. These lower highs in momentum, check this out. So we have a higher high, but look at momentum on the MACD. It's coming down. And I really want you guys to but completely start getting focused on what you're seeing with price action and with the indicators that you're using. It's not just about, oh, there's a crossover, I'm going to enter this. Doesn't work like that. Doesn't work like that. Okay. It is a simple system. If this is bothering you too much, you can also, remove it just so you can focus on the VWAP as well. Very, very interesting tool, the VWAP, especially the one that we are using. Like now, look, we have a bullish cross, momentum's up. That doesn't mean I should execute this, even though this market is technically in the short time frame bullish because we are holding higher lows, right? I want to see people incorporating the fibs. They are pretty important. So if we take this top and this bottom, we see that we have kind of rejected 21. We are above it, right? There is a fake out. Remember what a fake out is? A fake out is one candle out, next candle in, and that's exactly what happened here. We moved up, we have a rejection here, and we're closing in this area, and we're moving up. So if we connect what we see right now, this makes this trade here valid. The only thing we're missing is momentum here. But as an overall, we're good, and we're missing, of course, the ATR. So I don't want people rushing when you're executing trades, and we'll talk about that in the process. And actually, let me move to the process right now and just explain this to you guys. I'll talk about a couple of points, and this can be seen, what I'm about to say, you guys see it in the course as well. And I'll be frank with you and dead honest. You all, even if you're, working and you got a family and this and that, you find time to sit on your phone, you find time to drink coffee and blah, blah, blah. Try to maximize your screen time on the charts, but not for the purpose of fully executing trades. Maximize your time on the charts to not only in the beginning before you sit. It's not just about, I'm going to sit down and start trading. That sounds fun, but the proper way is to just at least spend 5 minutes on preparation. You want to prepare yourself as much as possible so you can have an edge in the markets. Preparation comes down to many factors. Knowing what news is coming out. What time is that news coming out? What's happening with the overall market? I'm going to make your life very easy from tomorrow by releasing information in the trading hub. You're going to know which assets to trade. You're going to see me going over these assets in the course. And you're going to see how they're moving because they're highly volume pairs. There was news as well. All of this helps us find what we should be trading throughout the day. Indices are generally great. They're generally moving. They're very busy since COVID kicked in. There's always something moving them. Aside from COVID, there is politics and data and blah, blah, blah. But the process is simple. All you need in 1 week is between 5 to 10 solid pairs or solid setups, let's say, planned setups a week, 5 to 10. And if you focus and find those 5 to 10 assets, for example, my watch list is clean right now, but let's go over just one pair from here. Let's go on NASDAQ. Let's go on NASDAQ. And this is right there. This is the start of the day. Okay, this is the start of it. Actually, you know what? Let's go to the DAX, because the DAX makes sense because it moved perfectly at the market opens of London and New York. So here, you see this move down here and this move down here. Check out the time this is happening at. 9 a.m. What opens at 9 a.m. my time, 8 a.m. UK time? The London stock market. When London opened, we've seen a beautiful push down. The other thing that we're witnessing here is that we're making lower highs. Look at this. High, lower high, lower high. We are moving up on very low volume. Volume kicks in. Volume starts rising here. By the way, there's a beautiful continuation. But what's happening here? Momentum is going towards the downside. You don't have to execute this. But here you're getting a clear-cut confirmation. ATR is going up. We already have a bearish crossover. You're below this. Momentum has been very weak, even though the market has been going up and the market shoots down. Eventually, we see a double bottom in the momentum of the MACD. Volume is decent. We're going up. And look at the time now. 3:30 my time, 2:30 UK time. New York Stock Exchange opens. This was a synced, beautiful move from London to New York, coming pretty much to 38.2 from this swing. We also have what? Lower highs in momentum. Volume is kicking in over here. Very similar to this volume here. Look at the volume down there, the volume bar, the red one. You see, that's right before the open. Well, at the open, volume is increasing here. At the open, we have a big volume. Over here, we're also increasing in volume. The market tries to battle. The ATR holds. We come out of the ATR, one out, next in. Fake out. Remember, one out, next in. The market comes up. Where does it come to? 38.2. Beautiful move. Momentum is bearish, clearly weak, even though the market has been coming up. Then the market crashes. Momentum remains, and that's it. Now you don't have to execute here and get the hell out down here. It's a very simple process. You can exit on the next green candle. Red, 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 green, get out. Wait a little bit when you get confirmations and come over to your 200 ticks. So this is the move. When you come over to your 200 ticks, you'll find plenty of excellent little opportunities. Little, in this case, would have been 150 points. Over here, you have a pretty strong move towards the upside. Volume doesn't work on this, so just give me bear with me a moment. Let me just see what time this is at. 9:45. This is at night. That should be this candle here. And you can already see that momentum. Look, it's becoming weak or strong, actually. I'm just saying there is weakness on the bears, and the market's, pushing nicely up. You have a consolidation over here. Market eventually breaks out, and what does it do? What does it do here? This move to this move. So if I open the 200 ticks again, one sec. That's that move, I think. Let me just check the timing of this. Actually, much easier. I'll do it like this. That's this move. That's the last move in the markets. So if I take the last move from the bottom to the top, we have fibs, correct? We got fibs. Market starts shooting towards the upside. We have a higher low. We know based on that 5-minute chart, what? That momentum is bullish. It's already bullish. It's coming down, yeah. But we had very weak momentum in this little range over here. And then the market shot up. So that from this area here, from that 30 and 38.2, is a solid anywhere between 70 and 50, 40 points. The point being is that all you need to do is wait for the valid setups to occur. You need 5 to 10 of them. And I'm not saying 5 to 10 trades a week. You can open 2 million trades on those 5 to 10 setups, as long as the setups are valid. And what do I mean by valid? I mean that there is liquidity on them. You see them in the trading hub. I share them with you. There is news, there is this, there is that. Something's going on with those assets, meaning that they have a higher chance of moving. Doesn't mean that they're going to trend. And keeping in mind the way we trade, we really don't care about a trend. We can change, you can trade this down and then trade this up, because you are going to get those confirmations. Once you go onto the 200 tick, you have very early entries. And what do you have over here? Check this out. Here, you have a beautiful little buildup for bulls, right? You already have a bullish cross. So you don't have to wait for the ATR here. So if I come here and I move this over here, and I go down to the 200 ticks and just scale back to that time, that's it here. Yeah, correct. We have the crossover. We have solid momentum. We're above the, what's it called? The VWAP. Here's the breakout. We shoot down, momentum's shooting towards the upside, and that's it. You can just grab this and try and trade it to the next level of the ATR. You can use your fibs on the 200, your fib extension. So top, bottom, right? And there's your 61.8, there's your 27. They're all hitting. You don't have to ride it to the moon. You just have to enter the right trade with the right volume, and that's it. And you're solid. So again, the process is simple. Find 5 to 10, depending on how much time you have. I'm going to make this job easier for you, of solid and planned setups for the week, more than enough. Then just trade them properly. Compound them, be aggressive when you need to be. Use your A+ and A trade exposures. In those setups, you should only have liquid assets, things that could be moving based on the trading hub. Then all you need to do is follow the system. Basically the rules. What I'm talking about, the rules, is entry rules, which, by the way, I'm going to release that video in the morning under the foundation videos for the course. Entry, your risk management, your position sizing, your exit, the general stuff, the basic stuff, which should be pre-planned. You need to know what your A+ exposure is, because you need to, as traders, what we need to do sometimes is pick up our skirt, grab our balls, and execute a bit of a bigger trade. Because you're here to make money. Exposing yourself on C setups constantly with tiny exposure is not going to do the trick. But when you say to yourself, listen, I'm going to be fucking patient. I'm going to take my time on this one. And I'm going to wait for the right setup. And when everything lines up perfectly, I'm going to go. And if it's a valid, solid setup like this one, for example, I'm going to go A+. But if the trade starts failing, I'm going to get the hell out quickly and I'll wait for another confirmation. And if that other confirmation comes, boom, I'm going to get in again. The point being is just have your patience ready, sit down, have your watch list set up, skip through the watch list constantly. Just do that. Put some instrumental music, by the way. Put some oldies, put music that injects energy and focus. So instrumental, for example, Mozart and shit like this really helps. I'm not a guy that wants to go to the opera, and I'm not going to put that while I'm trading because I'll probably throw my screen away. But I'm saying like some nice instrumental music really helps you focus. First of all, the time's going to fly by. But secondly, you need to be waiting patiently, waiting for the right entry. So trade liquid assets. All you need is a couple of them a week, 5 to 10. Follow the system rules, the execution rules. Don't enter late, don't enter early. Simple. Know when to break the rules. You don't need the fucking ATR every single time in your favor. So if you have plenty of confirmations, that double bottom down here, the crossover here, we're above this thing here. We're building a continuation. You don't have to wait for this. The crossover already happened. You got like 5 out of 6. Take it if you really need to. But take, for example, a B exposure. And then when the full system goes green, go boom, okay, I'm in. I know how much left. So let's say my full exposure is 10 lots. I'll take 5. I'll wait, full confirmation, boom, another 5. And in the next here, in this case, this is a 200 tick. So from this full confirmation to 61.8, it took that's 12:36, and this is 2. So about an hour and something for the full confirmation, right? And that's a solid 66 points. And then you don't have to execute again. You just, again, back to the process, waiting. I'm waiting. When I'm done, call it a day. You don't have to have a fucking position open all the time. But when the market starts moving and starts giving you things like this, you want to reap those rewards because you waited. Now, I'm going to tell you something else. Scared money doesn't make any money in this business. If you're shitting your pants when you're in a trade and you want to get the hell out, that's a big problem because you're not going to be able to manage those trades well. Meaning, here's what the side effect to your psychology that's going to happen. So let's say I execute this trade. It starts going, and I opened a bit bigger, A plus, looks good. And I'm like, oh, it's making a pullback over here. You see this candle closed right there. And I get out. And then all I'm going to do is come back to this asset and I'm going to watch it. And it's going to be, oh my God, I could have made this much. Oh shit, it could have been this much, because I wanted to move to something else and I didn't have the cojones, the balls to hold on to the winner properly or to ride the winner to its full extent, which would be maybe the ATR crossover or even price hitting the VWAP, because in some cases, the VWAP will hit before the ATR. And then what's going to happen is regret, and then FOMO, and then all of those beautiful little emotions that make us blow up our accounts and lose money. So be in control. And like I said, when you got to call it a day, you call it a day. Call it a session. Trade the London Open. Okay, that's great. There's a breakout here. You're waiting for the right confirmations. It's not about what you think is going to happen. It's what you're seeing that's happening. And the most important candle that you're watching ever is the current candle. So all of this is bullshit towards the side. This candle here is all the money, because this one here is going to determine what you're going to be doing with the market. So this market looks great. Do we enter here? Absolutely not. If you really want to enter another one, go down to the 100 ticks and wait for that neck crossover. As long as everything else still agrees that this is going up properly, then milk it. I know very good traders in the stock markets. I've spoken to you, few of you about this already. These guys, they sit down, 1 minute charts, boom, 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 boom. They don't try to grab, $1, 50 cent, 20 cent moves, which I'm talking about $1, 100 pips, 20 pips. Some of them are happy with 5 pip. They get in, they get out. They get in, they get out. It's not scalping. It's day trading. Scalping is seconds. These guys open for minutes, 5 minutes, 10, 20, 30, 40, an hour. But throughout that time, they're also opening more positions. And it's very easy to scale up your account once you're focused, once you're primed, once you're waiting for the right entries. There is still a lot for you guys to learn. There is a lot, but it takes time. And the good thing is, I guess we all have it. So the process is simple again, right? Liquid assets, follow the rules of the entry, position sizing, exits, what you're trading, liquid assets, wait for your entries, very important skill, patience. And try to build it already from this week. I'll try to no, I'm not gonna try. I am gonna remind you tomorrow that be patient with your entries. I'm gonna be live morning, midday. Every time I'm trading, I'm gonna be live. On another note, when you call it a day, just repeat what you did. So when you're done trading, when you come back, remember why you're there. It's not about just opening your screens and, oh, there's a trade. That's gonna work until it doesn't work, and that means you're breaking so many important processes of trading, and that's a big no-no. So focusing mentally, and you'll see that in the course too, mindset, most important thing. System 10%, money management 20%, mental skills, everything else. Because the system, you learn it once, all you need to do is repeat it, follow it. That's all you need to do. You just have to learn it and then just follow it. That's all. Like, know the entry rules, know when you're getting out. And again, you don't have to enter here and then exit at this cross. Just exit when you're happy with the profit. It's not about maximizing the pips. It's about making money. And the way you're going to make money is not entering every single signal, but only the good ones. So what do I mean by good ones? There are 3 types of entries, B, A, and A+. And those directly correlate to the exposure you're taking. B, A, and A+. So B, A, and A+. Forget about the C over here. Forget about this one. One sec. You got B, you got A, you got A+. That's all you, one sec. Okay. So there is no C, just B, A, and A+. These are your trades. This is what you're entering. Your position sizing depends on how much conviction you have, how much information you have that supports your trade. Anyway, what we're going to do now is go over to this PowerPoint and let's go over combating overtrading. Now, there are many ways to combat overtrading and the lack of discipline, because overtrading is literally the lack of discipline, not having discipline and not having enough, mental attributes or not following your own mind to tell you to, hey, what the fuck are you doing? Stop, you know? But the one thing that helps me is reading my rules and my goals every single morning before the trading day. Okay, I want to go over the rules of how I'm trading. When I don't do that, usually I might rush early entries, late entries. It happens. But it's all about, I've decided a couple of weeks ago to really push myself and aggressively improve myself and develop myself further. So having your trading rules written down, you know, execution, position sizing, all of these things, you know, having that, and I'm going to make a little PDF brochure for this, where I'm going to have that listed. I'm going to actually start working on it after this session. Having that will actually help you, reading that every day. The next is your morning, you know, goals. Like everyone has to have goals. Every human being has to know what do they want out of this life. Because when we stop setting goals, we kind of, you know, get lost. You don't know where you're going. You have no plan. You're not organized. Then you're just another guy just walking around the streets and going to work and home and work and home. And that life sucks. You need to have hopes and ambitions, and that's goals. Now, by reading these rules every morning, it subconsciously reinforces them in my mind. So I'd really appreciate if you guys do that too. I'll make a very quick version for the morning tomorrow, or actually I'll fix it. I'll be up around 5, so I'll fix it. Now, one technique to combat over trading and to keep you in tune with the market is to always have an ongoing conversation with yourself. Yes, you need expert advice. You got to talk to yourself because you are an expert in the field of day trading. And you need to know that, appreciate that, and constantly ask yourself good questions. And of course, try to answer them. What is the market doing right now? Think about it. When was the last time you were trading and you actually said, what the hell is this market doing right now? Let me see. Are we in a range? Are we going up? Are we going down? What's going on? Is there heavy volume going on in the markets? Is there light volume? Is the market barely moving? Is everything around 0.1, 0.2% up? Should I even be trading this market right now? Should I wait for something to happen and then get back into it? Am I making money? Am I losing money? Even though the money is not that important, I mean, not to think about it too much, just a side effect. Follow your rules, finish the session. How much am I up? That's it. Switch off your P&L on C-Trader. Don't look at it. What time of the day is it? You know, sometimes I forget. Sometimes I'm sitting there and I'm like, holy shit, I've been live trading from 8 a.m. till 11. What the fuck? That's not good. Should I be trading at all? Now, another must is always to have a plan. Every morning when you sit down, every midday, every night, depending on where you are in the world, you gotta have a plan. If A happens, I do B. If C happens, I do D. Do this on the higher time frames, of course, what I mean. You know, check the markets. I think I had the best trade of the year for me was AUD CAD shorts. I waited for the news. The news went crazy. Didn't touch. I said, okay, Canadian news is fucking great, which means that they're going to be most likely increasing their interest rates early in 2020, 2022, meaning their currency is going to be attractive. What is the weakest pair? You know, I don't have to do much to find the weakest pair. All I need to do is this. And I'm like, where is it? There it is, AUD, the weakest pair, right? And that's before pre-market. So it became even weaker. So what did I focus on? I focused on AUD CAD, shorted the fuck out of it, and made enough money to cover any loss that I had probably in the last fucking 4 months. And that was simple because I was prepared. I knew what could be happening. And when it happened, I didn't trade the news. I traded after the news. The trend continued going down and I maximized it. So essentially what I'm saying is you need to be prepared so you do not start to overthink and make careless decisions. You just need to be as robotic as possible when you're trading. Now, another excellent technique is visualization. I'll explain to you what I do. I'm a very big believer of visualization. I have done it for a lot of things in my life, even when I was broke and very unsuccessful in my life. I visualized, and that gave me a lot of hope, gave me a lot of motivation, and it kind of told me where I should be going in life. I'll give you a small example. you wanna, let's say you wanna buy, I don't know, a boat. Imagine this: you sit down, you envision that boat, you close your eyes. It's basic visualization. It's called future pacing from NLP. Very powerful. You sit down, you visualize that boat, you see yourself on that boat. Now imagine you're looking forward, beautiful sea, you're sitting on that, standing on that beautiful yacht, boat, little ship, whatever the hell you want. And then you turn around and you look at the road traveled to achieve that boat. Everything you had to do, how much money did you have to make? How much money did you have to save? How much did you have to work? Blah, 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 blah. What did you do? And then you see yourself making that money. You see yourself, executing those trades, for example, or selling those businesses or whatever, So then you kind of understand where you're going to be going. I'll make a session on this later better. But anyway, let me get back to this. Now, I'm a very big believer in this, which is visualization, especially in trading. And of course, my life and my goals. You need to set aside time in your day to use visualization, to work on your weakness and reinforce your strengths. For example, tonight I will lay in bed and I will visualize what I would have done differently this trading week. And especially what I'm going to be doing, I wrote today, tomorrow. Especially what I'm going to be doing tomorrow. The market should be busy. A lot of breaking news, a lot of information coming out. So the market could get busy. We got Australian interest rates. We got a lot of things happening in the markets. So I'm going to sit down and visualize all that. I'm going to visualize myself waiting patiently for those executions. I'm going to visualize myself entering big when I need to get in big. I'm going to visualize myself making money. I'm going to visualize myself executing a trade and it's going against me, getting out, waiting for the confirmation, getting in short. All the processes. And then, of course, like I said here, I'm going to visualize everything that happened in the previous week. All of the mistakes I did, I'm going to see them and I'm going to find ways to correct them. The mind is a powerful machine. Powerful. Yet, most fucking people don't use it. And we don't use it, But that's the epitome of success. I got to tell you, check anyone. Ray Dalio, the owner of the most successful hedge fund in the world. All he talks about is meditation. He says that he owes all of his success. Guy runs trillions of dollars, manages money for the richest people in the world. Even if you had 20 billion right now, you couldn't be his client. That's how much money he has. He's got the most successful company in the world. Why? Well, in his words, he says it's visualization. It's meditation. Anyway, we are done. Q&A on Discord. If you guys have any questions, shoot them in the main chat so I can answer and everyone else can see. I hope this session has helped you to prepare for tomorrow. I'm going to be active in the morning around 7 a.m. and we're going to do some pre-market trades and then trade the what's it called? The London Open. Thank you all for coming, and I'll see you in a bit again on Discord. See you guys. I'm shutting down. Bye-bye.